Welcome back to the Kiwi Adviser Network Podcast. Today we're joined by Satyan Mehra. He's from iConsult. He's got an amazing amount of accolades, Young Advisor of the Year, So I'm really stoked to have you here today. Thanks for joining us.
Thank you, Warwick. Thank you very much.
And I thought a good place to start would just to find out your journey.
Sure.
You've had iConsult for 5 years now.
Yes.
How did you start the business?
How did I start the business? I had worked in the main banks for about 9 years. That's from 2008 to 2017 actually. So I worked in the banks for 9 years. On the side, I had my other businesses that I was running at the time. Came to a point where my businesses outside, which were sort of Pizza Huts and childcare centers and restaurants, Indian restaurants, grew to a point where I thought I wanted to make the shift and move into the business. That was one. The other big motivation was a part of my success, that was when I sort of started iConsult, was 10 years in New Zealand. Part of my success I owed to the bankers who helped me get to where I was at the time, who helped me make informed choices, educate me about lending, supported me through my deals when I went to acquire these businesses, acquire these properties. I had a fair bit going on. So the second big motivation was I wanted to go out and replicate all of that. And that's when my passion led me into forming iConsult. It was to try and replicate what's been done for me. And equally at the same time, I wanted to spend some more time in the business, empower myself and empower people around. So qualified as a chartered accountant, left my accounting degree, didn't go for a hardcore accounting role sitting behind the desks. My passion was property, my passion was finance, and that's how I started iConsult. Took the plunge.
Wow. Huge journey. And so how many businesses do you run as well as iConsult?
So presently I've got hotel in Queenstown. I've got property development that's in Auckland central suburbs. I've got a couple of childcare centers that I'm running in Auckland as well. And then I've got a fair bit of property investment going on the side, and iConsult.
Okay, I got to ask. At the start of the day, because it sounds like you've got a lot of responsibility.
Yep.
How do you structure your day?
How do I structure my day? Look, I live my life on calendars, so organization, time management is pretty important. So I guess in the morning, I try and get up early, spend a couple of hours myself.
How early are we talking?
6:30, 7:30.
Okay, that's pretty good.
Yep. So start by then, and those 2 hours, that's uninterrupted. I'll sit through, I'll plan my day, I'll see everything I've got going on. I'll look at all the meetings. Like for this morning, I got up in the morning, I've been through your emails, I knew this was on, I'll sort of prep whatever I have to do. So I'll plan my day, and then about 10 o'clock, I'll hit the office. Once you hit the office, those next 5 or 6 hours are just iConsult, because that's what you're there for, that's what I do. And then I'll sort of try and wrap up by the day, just making sure everything that I had to do has been done. If anything's pending, why it's pending, what's quizzing tomorrow, and so on. And then it's like a personal reflection journey as well. So it's very important to hold myself accountable before I can hold other people accountable. So I think that's the biggest thing about my day.
And like structuring it can be really tough because the nature of an advisor's role, it's people are calling you outside working hours. Do you pick up phone calls like outside of work?
Look,
or?
I do.
Yeah.
I do pick up phone calls all the time. I usually try and tend to shut off by 6:30, 7 o'clock in the evening. If it's something really urgent, if you were a first home buyer who's going unconditional tomorrow and there's something with your finance stuck in today, I'll pick up your call at 10 o'clock in the night as well.
Oh, wow.
But if you had 20 days on your finance, then I probably might skip.
Just leave that one till tomorrow.
Yeah. So it's sort of balancing, you prioritize. You have to sort of make that balance between your work life and your personal life, because that's when you get your best output. You can't be working 24/7.
I know some people do.
Some people do.
What about weekends? Are they on
Weekends?
The
There's no appointments, so I've got a very strict rule at sort of in iConsult. I only do working hours, so I sort of start at 10 o'clock. I'll finish at 6:30, and I don't do any evening appointments. I don't do any weekend appointments. At most, if it's an existing client, I'll probably do a Zoom call or something on a Saturday, half an hour maybe, but I'd say maybe 1 or 2 calls in about a quarter. Okay. So the idea is that, look, Monday to Friday I'm available, and I've sort of purposely changed my timings from 10 to 6 to accommodate for people who finish work at 4:35. So till 6:30 there's plenty of time, and that's when it is.
Great.
So you want to call me, you want to reach me at that time, I'll be there.
And you talked before about the work-life balance.
Yes.
To you, like maybe what does success look like to you? You build up a lot of different businesses.
Yes.
Do you have an end goal in mind?
See, there's 2 things. To me, success is, are you happy? Are you content with what you've got going on? Do you, when you get up in the morning, when you get out of bed, are you excited to go to work? So these are all of those sort of your more qualitative things. And as long as you're happy, that's success. The second thing is also empowering yourself. You're empowering yourself to live your life, to provide for your family, provide for yourself. And I think that's very important. I'm really big on sort of planning your financial journey, making sure you've got sort of building a passive income on the side, because the reality is we cannot rely on our 9 to 5 to provide for the rest of your life. You know, at some point in time, I'll be 50, 60, 65, retirement age, kids, family. You cannot rely on 9 to 5. Put it this way, you really don't have the energy by then.
Yeah.
And then would the social system really support me? I don't know. Or even if it supported me, will that be enough? I don't know. And I can't place my life in someone else's hands to me.
Yeah, you got to take control.
You got to take control. So I think for me, it's very important to do that. And if you sort of, if I'm helping myself do it, if I'm helping my clients do it, and you get to that stage where you've sort of built in what I call passive income. And passive income to me is income that comes in without any exertion, without any personal exertion that you don't
Income
have.
in your sleep.
Income in your sleep,
Yeah,
correct.
yeah.
So if you do that, so that's success. And that's just to sort of, like I said, to take control of your own life.
Okay, and then slightly outside mortgages, but like the motivation like behind like the Pizza Huts and like the hotel, like how do you get into those ventures?
Sure. So look, it's a funny start. Go back 2008. I moved into New Zealand. I moved to New Zealand in 2007. 2008, started working at the bank, and 6 months down the line, I realized how easy it was to get a mortgage.
Great time.
Yeah.
Right at the GSC.
I was 19 at the time when I bought my first property, 19 years old.
Wow, man.
So I bought my first property, and that was great. I was working at BNZ. I bought my second property, great. I was like, wow, this is magic, right? And then I went to buy my third property. So when I went to buy third property, I got educated that there's something called servicing. And it doesn't work like how you send an email to say, my salary is $500, my rent is $200, my mortgage is $300, I can afford it, right? Banks do stress testing, right?
Yeah.
So I got declined for that mortgage. And that's when I understood that, okay, look, if I, on my salary, on 50K that I made at the time, could buy 2 properties, if I had another 50K, I could probably make 2 more properties. And how do I get another Satyan working for me? So that was, I had to get into business. Was it reasonable for me to expect that in the next 6 months I could have a 50K pay rise? Probably not. So I thought, how could I have another me working for me? Yeah. And that's how I got into wanting to get into a business. So I started doing a lot of research. I started doing a lot of homework, and I got into Pizza Huts. Why Pizza Huts? I was passionate about food. It was a franchised model, slightly proven. Risks were less. So I sort of put everything on a piece of paper that I thought I wanted to get out of this. And I ended up buying a Pizza Hut. I started from a Domino's to then a Subway. Nothing worked out. Nothing really ticked all the boxes. Pizza Hut ticked, and I got it.
Their pizza's like $5.
Exactly.
There can't be much margin in that.
The motivation was to have another Satyan working for me so I could go and buy more property. And that's how it started. It's
such you've got a clear goal. This is what I want, and this is what I need to do to facilitate that.
Yes.
And just being really intentional to getting to that goal. Do you still set aside time? What is your goal now, and how do you set aside time to achieve it?
You look, 100%. I do my sort of annual goal setting, and that usually happens in January. So I've set to myself some goals this year too as well. And as sort of I'm growing, they are about sort of making sure that existingly what I've got keeps ticking over. So as an example, come January this year, I was in the midst of a development in Sandringham, which are sort of building 6 units to rent them and hold them. And my goal was to get them finished up, get them rented out, get them on a longer lease, and put them in a position where they're more self-sustaining. So I set myself both financial goals and sort of personal goals. Personal goals are very much like I wanted to lose some weight, I wanted to be more active with my exercise and things like that. But equally, I'm very sort of motivated or driven to have set some financial goals and try and achieve them by the end of the year.
What is that? I mean, let's we really unpack that. Like, what does that look like? Do you write them down? Like, how do you make sure that you're tracking? Do you like monitor them each week or each month?
No. Look, I don't monitor them each week, each month. It's sort of look, 2 things: setting smart goals, specific, measurable, achievable, realistically. Put a time frame to it. It's very important. Something I learned at BNZ back in 2008, 2009. They were like, oh, smart things, And at the time, you thought, smart goals. Like, what's a smart goal? Why are they spending hours?
I'm not going to do a dumb goal.
No,
come on.
Correct. But then, as you grow, you understand the value of those basic stuff. So smart goals. So I do that. And then it's sort of doing a quarterly check-in. how you do it, whether you write it on a piece of paper every day, whether you track yourself monthly, it's up to you. Everyone's different. Look, weekly, monthly check-ins don't work with me. It's back in the mind. I put those 3 things down on my planner every day, right at the top. Those 3 things are written every day because I use an Excel sheet, so it's right there. Okay. It's in my face every day. I see it. I have a little printout that's right on my wardrobe next to the mirror, so I see it every day. It's in my face every day. It's a constant reminder that this is what I've set myself up.
I like that.
And this is what I'm going to do.
Staple it to the roof above your bed.
Exactly. Whatever works for you. So as long as you put yourself a goal, and then whatever works for you, you got to do it. And then the biggest thing is holding yourself accountable. I think if you fail to hold yourself accountable, if you cannot, if you then meet something and you don't reflect on it, why you didn't do it and why you couldn't do it and what you could do differently, I think that's where the problem is. Because it's very easy to say, oh, COVID hit, or this happened, or that happened. And who are you consoling? Who are you fooling? Your own self.
Yeah. Sometimes you can just push things off. You're like, oh, this is coming up, so I can't do it now, when... in reality, like, what's going to change in 2 months' time?
2 months' time.
Yeah.
I think what it is if you don't hit something, you have to sort of then look back and see, have you tried everything possible to make that happen? And if you have, then it's okay. We learn from our failures. Yeah. But as long as you can tell yourself that I tried everything possible in my hands to make that happen, I think you're fine. And I think you'd succeed.
And we had, just personally, I remember when I moved back, I was living in the UK for a while, moved back to New Zealand, and my partner and I, we sat down and wrote our goals out. And I remember at the end of the first year, we'd have achieved all of them. And some of the ones that I'd set for 3 years. And I really underestimated what I could do in that time.
You'd be surprised.
Yeah.
You'd be surprised. If you have a clear target in mind, if there's a clear goal that you're trying to achieve and you hold yourself accountable, to me, you'd be surprised.
Yeah.
You deliver results that you didn't think you could. And sometimes they're failures, which is okay. It's a part of it. It's a part of the journey. But when you have those failures, it's about not letting yourself get disappointed. It's about reflecting over it and saying, what do you need to do differently next time?
So let's say, without getting too specific, but let's say you have a failure. How do you deal with them? Do you have a post-mortem? What's the process?
Well, the process is sort of personal reflection. I was at university, level 5 paper. Okay. And one of the papers, they used to help us do a personal reflection end of every week. And that personal reflection was working in your group. How did it work? Did everyone contribute? It was...
I mean, at university, there's always 1 or 2 people who...
Correct. It was silly, right? At the time, I thought it was silly. Yeah. But when I've sort of started using that same stuff in my real life, it's very powerful. So when I've got a failure, I think, okay, what didn't I achieve? What did I achieve? Could I have done something differently? Because like I said, you make mistakes, right? And you try and think, what could you do differently next time around? A number of times, I think when you look at it, you'll always find something that you could have done differently next time. Yeah. And next time when you're presented with the same situation, you sort of reflect back and think, I'm going to deal with it.
And sometimes...
And you improvise.
Even in our team, you want new people to make mistakes. I think back to how I learn.
You learn from your mistakes.
Yeah, exactly. I'm like, I could have done that better. So constant feedback, helping people grow. How big's your team now?
So I've got 4 people in here full time.
Okay, so you got 4, and you including yourself?
Including myself.
Okay, and then how do you bring people into the business? How does that training look? How do you get them up to speed quickly? Right,
so getting people in has always been a challenge for me because I'm a little bit picky and choosy in terms of wanting staff. I'm very proud to say I've had a lot of people approach me who wanted to work for me, but I didn't hire everyone. And the reason, it's not so much about the people, it's about what I'm looking for. I'm not looking for that you're the best mortgage broker. I'm looking for your attitude. Skill is something that I can teach. Attitude is something I cannot change. It's very, very hard to change that attitude. So to me, I've always been after that attitude. I'm always been after that self-driven people who want to try and make a difference to the day, who would not take it as a job. It's not just about what am I getting paid, how many hours I'm spending. It's just about, do they feel good about doing it? So I think that's what it has been about. So I've always had people, I'd say I'm fortunate to be able to find these people who are very like-minded, who sort of come in, and then it's a journey, right? You see sort of what they do, how they could improve. You give them your personal experiences, and you share your learnings. If I'm telling someone, hey, don't do it this way, do it this way. It's explaining the why. Like to me, why is very important. Why do you want to be successful? Why do you want to do all these things? Why do you want to do it work? Why do you need to do something this way, not this way? Explaining that why is very important. So for me, with my team, the constant feedback is always the why. It's like, don't
being
tell
intentional.
me. Yeah, don't tell me, show me. It's that.
And
show them why, how it makes a difference, and it sort of makes it easier.
And if they've got the right attitude, then they're on the right track anyway.
On the right track.
And what is let's say you're trying to vet good employees.
Yes.
Like, what does that process look like? How do you decide if somebody's got like the right attitude? Do you make them change your tire, or I don't know? How does that work?
No. Look, I've never formally interviewed anyone. It's always a coffee catch up.
Okay.
Right? It's always a coffee catch up. 2 coffee catch ups, and you sort of talk. There's no structured interview. It's just finding out people. Like I said, I'm after the attitude, right? So when you coffee catch up, it's more casual. You have a chat. You understand why they want to do it, what's frustrating them in their current role, or why they're wanting to change their current role. Why do they want to join me? I mean, one of the questions I always ask, why me?
Why me? Yeah.
You must have, if you're good, you must have interviewed at a couple of places. Why would you want to join me? So when you do all of those questions, it tells you a lot about the person. Like as an example, there's this one person who I hired. When I asked him why me, he knew everything about my company. He knew a lot. So that actually showed me that he was actually interested. He had the time to sort of go on the website, read about me, go onto Google, do my search, and he said, look, I'm very inspired with everything you've done. So it tells you a lot about the personalities, right? And then if someone doesn't have that answer, and then they're like, because I love mortgage broking, because those just typical answers, sometimes you think, well, okay, yeah, maybe.
I'm here to be
maybe
wowed,
not.
guys.
Yeah.
So,
So I think to me it's very about, can I connect with them?
yes.
Are we on the same frequency? Do we have a similar mindset? And if that's there, then it's fine. Like I said, mortgage broking is something I can teach. I learned it, right? Skill can be taught. Attitude, you've got to bring it in. You can. It's hard.
I always feel like in this industry, because 50% of the industry are 1 to 3 man businesses.
Yes.
And when you're dealing with a business which is growing and scaling,
Yes.
we always look for people that have dealt with a bit of adversity over their career.
Correct.
You want people who don't mind change, because there's going to be a lot of it.
Yes.
Who can adapt.
Yes.
And have the initiative. And I mean, you're probably looking for a similar thing, but is there like a particular industry that you'd look to?
No.
No.
Like the guy who's so one of my finance associates, yes, he worked in a mortgage advisory business for a couple of years as support, and then he was at Westpac, so he was in the industry. But look at the other one, he was a relationship manager at a bank, totally sales, had no idea about financial analysis, mortgages, nothing, no clue whatsoever, right? He was working in India, and like I said, in a purely sales role, where the attitude was like, where the thing was just sell them anything.
Yeah.
But the guy had
try until they buy.
Exactly, pretty much. So very different. I mean, yes, banking, but very different in terms of what he'd done. He had no exposure to what we're like here, because out here it's completely different.
New Zealand's very different.
We're not selling. We're
Yeah.
getting to people. If people want it, we give it to them. We're not selling anything. So
That's mortgages anyway. It's
Yes.
people always say, mortgages are bought, insurance is sold. New Zealand people have a massive appetite for property.
They do.
Everybody loves it. You go to any barbecue or just catch up over dinner. What's the first thing people talk about?
Property.
Property.
Well, I think to me, that's the only natural thing to invest into and create wealth.
Yeah.
I mean, look at anything around the world. To me, everyone's created wealth through property.
People need houses.
People need houses.
And pizza, apparently.
Maybe not.
Yeah. You could do a deal, like pizza and a property deal.
Maybe.
How cool would that be? Somebody settles in their first home.
Yes.
It's like a little hey, well done. You send them a large pizza.
Well, why not? Like I send my clients gifts, so you got to send them something.
Yeah.
You got to congratulate them for taking that step, for signing on the dotted line, for signing on the biggest date of their life.
Yeah.
It takes a lot of courage to do that. So you've got to, like when I say empowering people, you've got to tell your clients that, hey, well done. You have to, especially a first-time buyer.
And that type of thing, it means something as well. I even think to our first night moving into my home.
Yes.
And we had no furniture.
Yes.
Everything was in boxes.
Yes.
And we got fish and chips and sat on the carpet.
Yeah.
And we got some wine. I spilled on the carpet. Classic first. But just like having taken that stress away and just doing something that means something to people.
Yeah, look, your relationship with your client just doesn't last from the start of the application to the settlement of the house. I think it starts a lot before. It starts with the planning and it ends, I don't know, to the lifetime. If I was to look at my clients, in the last 5 years, I've probably had 3 or 4 clients defect. Other than that, all my clients are still there. I know exactly what they're doing. I know exactly where they are, and it's a relationship that needs to last over a long period of time.
Do you take them on a journey? So, I mean, obviously, getting the house is one thing.
Yes.
What does the rest of the customer relationship look like long term?
Well, long term, it is about finding the goals. It's sort of these conversations that we're having about what's your why? Why do you want to be successful? Is it for your family? Is it for yourself? What it is? What do you want to achieve? Your financial goal setting and setting realistic goals. And then it's a journey. It's about starting somewhere. I mean, I've got one of the classic examples. I've got so many. I can literally give you 100 examples. But there's a Kiwi couple who I saw 4 years ago, and at the time they only had one property in Wellington. I even know the address by heart.
Where is it? What suburb?
Kandala, Delhi Crescent.
Kandala. I went to Onslow College.
Delhi Crescent.
Delhi Crescent, mate. I used to live near there.
Yeah. So they only had one property, and it was about I think sitting at about 77% in terms of equity at the time. So it's not really much equity. Servicing was great, amazing. And we started talking about property, very passionate young couple, wanted to build a property portfolio, and it was a journey. So fast forward to 4 years now, 3.5 years precisely, they are on the 6th property. They were in a position where the property in Kandala was just about 400K with about, I think, 300 something K debt. Today, if they sold everything, even in this market, they'll walk away with $1.5 to $2 million. And it's a journey. So 6 properties in Auckland Central is amazing. And it's a journey. It's about planning. Wow. It's about... one of the things, like I said, it's a journey, is they wanted a home, right? So we did get them a home, but it was sort of talking them through that your home, the first home that you buy or the property that you buy is not going to be your last home. So how about you try and find a property that is your home for now, and few years down the line, it could be an investment and you could get on to the next one. Because the day you spend all your money into buying a home for yourself, that's the day your investment stops, right? Because your servicing's blown, your LVR's blown, and your biggest mortgage is for self-consumption. It's not generating an income, as an example. So it's a journey. It's try and plan. It's role-play scenarios, and so that's
wow,
and we're still friends. I mean, we're sort of very close friends. Like I said, we still talk. The last property they bought was 8 or 9 months ago, but we almost talk every month, and sort of now. Given in this market, given ourselves 6 months, 1 year to then sit down, do a comprehensive review and see what's next again.
And do you meet with them? I mean, they're in Wellington, so it must be
no,
tough
they're
to
in
meet
Auckland.
them. But they're in Auckland.
They're in Auckland. So all the properties are in
mistake.
Auckland. They just own that one property in Wellington when they came to me.
Okay. So do you meet with a lot of your clients face to face? Like, how does that connection?
100%.
All of them?
Yes.
Okay.
So prior to COVID, I didn't know something called Zoom. Yeah. I had never done a Zoom meeting. My engagement thing was, if you want me to be your advisor, please take the time out, come to my office, we're going to sit face to face. It's always been like that. Even till date, every appointment, every application has to be face to face. Yes, the improvisation I've done is I do meetings over Zoom and Google Meet.
Yep.
But I'd say till date, over 50% of my applications I meet people in face to face. To me, it's very important that the client's vested into their journey as well. So for me, if a client cannot take some time out and come and see me, or take some time out for a Zoom call or a Google call and sit down and talk to me thoroughly, it's like how vested. It's for them.
Yeah, you're going to be spending so much time.
Without knowing any outcome, right? Yeah. I'll only know the outcome if they get a loan approval and then they buy. Until that point, I'm just working for free. So to me, I need my clients to be vested into it, and then that's why it has to be face to face. And I connect you connect with them. You
can eyeball them, you can see what they're like. How brings up another question. So around, doing a lot of stuff for free, I think a lot of advisors find it tough because you invest, how do you look at a customer and go, this person's not a time waster, they're going to be investing time so that I can help them achieve their goals?
See, to me, first thing is, if they make the time to come and see me, if they are taking that 1 hour out and talking to me over Google, that's the first sign. Because they're taking the time out. If they want me to have that Google call at 8 o'clock, if they want me to have that Google call at Saturday or Sunday, to me, it's a bit of a turn off, because it's for them. And if they cannot manage 1 hour out of their time to do something for themselves, I don't know. I could be judging. I could be wrong. I'm happy to be wrong. But it's a sign, right? But the moment they say, oh no, look, I'm going to come and see you, because a lot of people, you tell them, hey, let's meet. They get very excited. They'll be like, yeah, I'll finish work early. I'll skip my lunch break. I'll come and see you. Boom.
Great.
That's
yeah, you know they're keen.
You know they're keen, right? So it's there, and then you have a conversation with them. Then you see how sort of responsive they are to what the comments that you have, or what the possibilities are. I mean, I think with experience, you do sometimes find out who the time wasters, but giving everyone that first shot, giving them the benefit of doubt is really important. And then if you have done that and you've put your hand on your heart and say that you've wasted time in the client without any judgments, without any notions, and then they turn out to be a time waster, then it's okay. Then it's okay to move on and say, no, thank you.
It's not going to work.
It's not going to work. And look, I can say that I've done that to a lot of people. I don't pick up every client that comes my way, but sometimes you just have to do what's right for you and your business too.
Value your time.
Exactly.
So do you have, I know some advisors will have, as part of their, signing up process, they'll say like, oh, if you were to leave, there'll be a fee. Like, is that something that you've used or?
I have.
Yeah.
I have used that from day one, and I said this self, and I still do, and I think that's there. And that is with every engagement, because the thing is, I'm spending a lot of time for my clients, and I need that value back, because if they don't value me, if to my client my time is worth nothing and I come for free, well, why should I be advising them in the first place? So if a client's reluctant to sign on a clawback thing that you're talking about, it's essentially professional fee the time. I mean, if you go and see a doctor, you pay them, right? And you go to the doctor at the time that the doctor calls you.
Yeah.
When you sign your loan documents, you go to your lawyer and you pay them for the time. When you go and see your accountant, you go to them. They don't come to you.
With the lawyers, it kind of feels like you're not paying, because it's just like, oh, we'll slap that on the loan. It's it.
Yeah, correct. but then they don't come to you. They don't come to you at 8 o'clock at your dinner table.
No way.
So it's exactly the same proposition.
Why should people have that expectation?
Correct.
For advisors?
100%.
Yeah.
And why should I be working for free? So if they're not happy to sign on that professional fee sort of engagement thing, then essentially what they're saying is that they could leave and they're expecting me to work for free. In saying that, the other side is that engagement, that contract you sign, or the clawback arrangement that you have, needs to be reasonable, right?
Yes.
So it's two sides to it. So as far as your clients should not take you for free, you shouldn't be taking them for a ride. So it's both sides.
Fair and reasonable.
Fair and reasonable. And as long as you've got that, I think you're fine.
And after that first meeting, you'd both have a good indication if they're going to be the right fit or not.
You do. So our process is usually the first meeting. The first meeting is what we call discovery. It's chatting, telling me what's your pay, what's your this, but seeing the possibilities. It's not a full thorough assessment. And from them, it's letting them go and say, these are your options. This is what it could look like. It's based on what you've told me, which means when we do the actual assessment, things could change, because all of a sudden you have dates that you haven't told me about, spending you haven't told me about, whatever. But
always the case,
go back, high level, think about it. And during that meeting is the terms of engagement, taking them through and leaving them with that information. And if then they come back and say, well, if everything works, here's the link, book in a time for an appointment when we can do the application. Then you come for the application, you firm up, and it's okay. And that's how it goes.
I like that. And just touching back to what we were chatting about earlier was around learning from your failures.
Yes.
Were there any big lessons that you learned from when you first started out that maybe you could go back and tell your past self?
I think one of the things, or was it a failure? I don't know, yes or no. But sometimes, when you're talking to clients, you've got to have a gut feeling, right? You develop
yeah,
that. So
you know, straight away.
So I think one of the things it was that, hey, look, trust your clients, but do your due diligence. You've got to verify everything. So I did represent a client once who had some black marks to their name, and I listened to their story and everything, and I got it, and I fought a lot with one of the banks and got them the lending. It was a big deal. It was quite a big deal. And when I say black marks, there were a lot of black marks. It was just a lot of black marks. That's all I can say. Confidentiality.
No, you always want to keep it confidential.
Right. So I did a lot of that fighting with the thing, and I got it across the line. And then later on, I sort of discovered that maybe at some point in time, the client wasn't 100% transparent to me, and I walked away from the client. I walked away from millions of dollars worth of lending. That's it. So it's sort of like I said. So I think the learning for me was, hey, you have to be 100% sure. Like sometimes, and this was very subjective. This had nothing to do with your assessment on triple CFA or your expenses or anything. It was more of the 4 C's of lending, and the C was character.
Right.
So that's where I did some learning later on, and I sort of decided to part ways.
Your name's on the line there.
It is.
And
it is.
Without your integrity, like where's your business? So
exactly.
Learning when to walk away is so important.
Because when I went to one of the banks, the first question they asked is, Satyan, why are you representing this guy even? Why are you even doing it? And I gave the merits, and it took a lot of convincing to get it across the line and make it happen, which it did happen. And I think I could say probably a lot of that happened is because of the relationship with the lender that I had, and the quality of work that I submit. The confidence that they had in me. Otherwise, it probably would have never gotten by. But like I said, at the first side of when I got to know something wasn't right, I pulled out, and I said, no, thank you.
Oh man.
And that's it. So the learning was, hey, look, if you've got a gut feeling, maybe spend more time. Make sure you've done your homework and be thorough. I think the other learning that I've had is I was very principally sound when I started in terms of the terms of engagement, in terms of how we operate, in terms of how we do things. And I think to me, one of the learnings that I've had very early was that stick to what you want to do, because I sort of realized that over the last 5 years, wherever I made slip-ups with those things, or not slip-ups, but wherever I deviated from what I decided I'm going to do, I think that's where I was taken for a ride.
Right.
Those few instances when I sort of worked around clients and did visits to them or met them on a weekend and things like that, they're the ones who probably give me the most runaround. And
you should know in your gut.
You should know.
You get that feeling.
Yeah, you should. Because sometimes, you get taken for a ride. We were naive. I was dealing with a situation for our clients, and they were going through something personal, and you sort of you listen to them, you get bought into it, and then you start to sort of make these exceptions that I understand. Oh, you've got a lot going on. I'll come and see you on Saturday. We'll have coffee at one of the cafes nearby, and that's where you think, oh, geez,
what's going on?
Yeah. Because I think this, sometimes, not every time. Sometimes they stop to this. They don't value you because they think you're just available for them all the time.
And I mean, especially if you're going out of your way on the weekend, that's your time.
It is exactly. So I think that's why, as a business, you have to do right by your client. You have to do right by yourself. It's a balance. You have to set yourself some principles on how you operate, how you do things, and you stick to them. Like I've never taken an engagement on a client who wouldn't agree to those terms of engagement and disclosure statement. If they won't agree to it,
not a good fit.
No.
And for a new advisor that comes into your business,
yes,
how does the training process work for them? Like, do you sit in with them for maybe some of those first few deals, or?
So the process is for the first couple of weeks. I've got a finance associate who does a lot of lending writing, who's like a writer for me. So the first month, he pretty much shadowed me to every meeting to understand on how I do applications, what I do. Because it's not, even your application process is just not a matter of collecting information. There's a lot that comes out of that meeting. So shadowed me for everything, and then they would do it. When they're doing it, I'll review everything. Then it's feedback sessions. So like we'll do weekly catch-ups. We'll give them feedbacks on what I did. What I don't do is like if I pick up an error, I will just not go straight away, hey, this is wrong, do it this way. It's taking all of that stuff back, noting it down, having a meaningful catch up, and then catching them, taking through them journey of what went wrong or what they didn't do the best or what they could have done differently, why, helping them understand why, how it would matter in the application process, what would it do for the lender, and you take them through that learning process. It's what I call a very constructive feedback to sort of, hey, thank them for what they've done, which is good, and then again tell them how they could improvise. Like as an example, just yesterday, one of my other support guys was sending an email with a few things to a client, and they sent everything away, which is great. Okay, it was fine, it was acceptable, but I thought it could be done differently. So I redid the whole email, and I did the entire email. I printed it out and said, what I want you to do is I want you to take a look at what you're saying and take a look at how I've drafted it, go through and tell me which one would you prefer if you were the client and why. So it's that learning process. It's giving that feedback and showing them.
Yeah. I was just thinking about how we do our own reviews, and we always look at each time we do an internal catch up, it's always focused on 3 things.
Yes.
Because it can be overwhelming, especially if you're new.
Yes.
Like this industry is a really complex one to pick up.
Correct.
So it's always just like 3 main things, gives them something to focus on. And then once they nail one of them, you can just move on to something a bit more complex.
Correct. And to me, those reviews or those discussions are, again, held very casually. Because the moment you could tell someone, hey, we're going to have a review.
Yeah.
It's like,
oh, I learned this
my God,
recently.
what am I up for, right? The first thing is like, what am I up for? So that review is over a lunch, over a coffee. In fact, like right now, I'm sort of planning a little team thing. I'm thinking of taking them bowling next week. And that's where I'm going to do some personal development training with them.
Yeah, you're going to show them how to do a perfect strike.
Because you have to de-stress that environment.
Yeah.
Even if they're not, look, I've worked at, I've had managers, right? No matter how super is your relationship, no matter how good you are at, when you're walking into that review meeting, you're always nervous. So you have to declutter all of that. Because at the end of the day, we're humans, right?
I learned that recently. And I don't know if it's too much information, but got somebody in the team, we're doing a review, and it was like a positive one because I think they're doing a great job.
Yes.
And then during the meeting, they were like, oh, I was nervous coming into it.
Exactly.
Like, what? I thought this is a good thing.
I think to me, anytime you tell someone I'm going to give you some feedback, no matter who it is, you naturally get nervous because a lot of us are very self-conscious people. We think, have I done something wrong? Could I have done something better? You're very self-conscious. So you doubt yourself because you want to thrive for that excellence. So I think to me, taking them for a coffee or lunch and having that discussion is decluttering. You declutter that, and I think it's probably more positive.
Bowling's a great team outing. I like that.
Yeah. Well, imagine taking everyone for a bowling and then all of a sudden after that you say, hey, this is what you've done great. This is what you could do better.
Yeah.
This is how you could do it.
Maybe paintball would be a good one.
Either or. Well, that would give you time if you don't really like someone. Not really.
Yeah. You're doing this wrong. I think Wesley, our sound gremlin over here, he'd love that, wouldn't he? Yep. Warwick, you're asking the wrong questions.
No.
It's the only way I can learn.
Yeah.
And so when you're looking at bringing someone new into the business,
yes.
How do you look at maybe a support person or an administrator versus a new advisor? Like, how do you make that decision?
I think to me, it's sort of understanding what the business needs. Sort of, again, I come from an audit background. As a chartered accountant, I spent 3 years I'm a chartered accountant. I spent 3 years in internal audit at B&Z, auditing the entire bank and sort of, working in the team. So I'm very analytical when it comes to that sense. So it's trying to understand the business needs and then seeing whether I can find someone who can add that value. And then, during that process, sometimes you come across who doesn't really fulfill that need, but you think can add a lot of value to your business. And if it is, then you bring them in because they're not a cost, they're an opportunity cost. You spend the money and they're going to give you the return eventually, right? It's good debt versus bad debt. It's good expense versus bad expense. So it's exactly, to me, that's what it is.
And is that because people are approaching you, or are you intentionally going out and saying, okay, I would love to find this type of person, or is it just something that rolls across your desk?
Yes, it's both. Look, it's both. So when you have a need, then you reach out to people and recruiters and say, I'm looking for someone, you've got someone, bring them our way. And then usually when you're networking, you meet people and when you meet, you probably have a coffee catch up, you'll have this, you'll find out. And sometimes it's like that. Like the guy who's one of the guys who's working in the team, I just caught up with him for a coffee. I had no need to hire him at the time, and I did, and he wasn't looking for a role. So it was just we met, we got for coffee, we started a conversation, and then I thought, well, you could add a lot of value. And that's the guy who worked in India as the one I was talking about, who didn't have this banking background. And I said, well, join in.
You've got the right skills.
Exactly, you've got the right skills, you've got the right attitude, and how it happened. Because to me, I thought, well, for the first few months, it's an expense. I don't really need him. But then it was, well, I know that eventually you'll add a lot of value to the business, and he is adding that value today.
I can tell by the way you talk about your customers. You obviously care about them. You love helping people.
Yes.
Do you ever see your role within the company as more of a manager helping out the business rather than being on the tools? Okay.
No, not a manager, maybe a leader.
Sorry.
There's a difference.
Wrong choice of words, yeah. An inspirer.
Correct. So I think for me, my role is very much having that connectivity with the clients, because end of the day, as an advisor, they come for my name, they come for me. So having that connectivity with clients is very, very important. But then when you hand over them to a finance associate within the business who's going to then do the process, it's making sure that they connect at that level too. So that at the time, my role becomes I'm going to be off the tools now, and that's when I'll make sure that the relationship is working. It's working, and then do constant check-ins. Like even if I hand over a deal to one of my guys in the team to do the entire deal, I'm informed throughout the process, right throughout, because we do a morning catch-up, we have a workflow manager. Client could call me at any given time and I'll know exactly what's happening.
Yeah, that's really tough to do because as a business grows,
Yes.
you get more people in, you get more clients, you got to manage you got a workflow manager. Like what does their job look like? How do they inform you in an efficient way?
No, it's an Excel sheet. It's an online Excel sheet.
Okay.
So everyone is updating it consistently. Every email that goes out of the business, every email, even a refix email, any email, I'm copied into.
Right.
So any email that all those 3 people send, and hundreds of them, I'm copied into every
I would
email.
hate to see your inbox.
Yeah. No, but look, it's very clean.
Prove
Probably 20 emails.
I'm kidding. But you know how some friends, maybe
Yes.
not in this industry,
Yes.
and you look at maybe they open their phone next to you,
Yes.
and their inbox notification says like 3,000 or something.
No. The moment it's over 5, I'm nervous. So every day when I, like in my calendar, I book in time at the time, like I'll book in half an hour, 45 minutes twice a day. And during that time, I will not take phone calls. I'll not do anything. All I'll do is I'll just file those emails. So I'll have a folder for each client as an example. My staff are sending emails. I'm going through everything and I'll file them. And the moment you think something that you can jump in, you can add value, I'll do that exactly.
I actually, I run this policy called Inbox Zero.
Yes.
That Chuck, who started Trail, got me into.
Yes.
And I just never look back, and I make sure that everybody in the team does it too.
Yeah.
So it's the 4 Ds, and I hope I can remember these off the top of my head, but it's so when an email comes in your inbox, you either delete it. So if it's just spam.
Delete it.
Or archive it.
Do something about it.
Yes, do so. If it's less than 2 minutes, do
Delegate
it. Delegate it if it doesn't relate to you.
Yeah.
And defer if it's something you want to look at later.
Correct.
So
That's right.
So my inbox is always, don't check this now because it's probably got a few in it, but it's hopefully 0.
Yes.
And then those bigger tasks, I always try and set some time aside to do them.
I'm exactly the same. So I've gone through that 4 Ds as
Yes.
well. I might not remember the 4 Ds, but I knew exactly what you were talking about.
Yeah.
Delegate, do something, delete, defer, whatever. So that's how I operate too. So every email I've copied into it because that's when you know, your clients know that you care about them. I mean, even if you had 100 emails and you're not actioning any of them, but you're just keeping yourself informed, how long does it take? 100 emails, maybe 30 minutes at tops.
Do you have an expectation, or should clients have an expectation of how quickly you should respond to an email? I notice some advisors you'll send them an email
Yes.
and I'll get a response back saying volume's high, we'll get back to you in a couple of days.
To me, if a client's expecting that I respond within the next hour, that's unreasonable. And to me, if you're responding 3 or 4 days down the line, it's unreasonable too. I think to me, it's very much about letting them know the process. So as an example, and if it's urgent, then of course you do. So like for us, as an example, when we do the application, once they leave the application and they walk out of the door, we would tell them that, hey, look, we'll submit it. It will take us about 2 working days to get the application submitted. These days, the lenders are 10 working days. So we would probably come back to the 12th working day. So it's setting expectations on around communication. But when you are in the midst of, you've got 5 days DD, this and that and whatnot, I guess that's when your communication has to be a little bit more comprehensive in the sense that you cannot then, you can't afford to sort of reply on the 3rd working day. But I think if the clients are in that situation where, where you're time bound, then at least a business day is probably reasonable to get back to them. And again, when you're doing it, you're talking to the clients a number of times, you're on that phone, you're on that email, how difficult it is to just add another line that, look, next I'll come back to you is likely to be this.
Yeah. And just setting those clear expectations at the start. It's funny, even when I was buying my home and we were getting finance in order for a property we're looking to purchase, and I'm in the industry, so I've got bags of empathy for advisors because I know how tough it can be to get the deals across the line. My partner, after one day, she was telling me, when are we going to hear back?
Yeah.
I'm like, babe, trust me.
Yes.
Trust me.
It is setting expectations. I had a client who sent me a query about a bit of a equity release a week ago. I was really under the pump, but I made the call phone straight away and I said, look, I'll probably come back to you by end of next week. Is that okay? And that's it. So they know. Yeah. So it took me 2 minutes, but they're not expecting me to come back to them today. But I'm going to sit today. I've booked some time in my diary. I'm going to sit today, work on it, and give them a heads up. And that's how I... Communication. It's easier to keep people informed to me versus trying to justify why it took you so long or what happened.
Yeah, that's... it's like that old ethos. It's hard to go to the gym.
Yes.
But it's harder to be unfit and not go, or relate that back to everything. Every time there's a task, I'm like, oh, that's a tough one. It's tougher to do it later when it's turned into something else that's maybe exacerbated.
Yes.
I feel like I've learned so much about you and your business today. I've really enjoyed hearing about your process and the journey you've gone through. I'd love to see what your next business venture is, whether it's going to be another hotel or a Pizza Hut or.
Sure.
But yeah, really love hearing it. It's been amazing. Thanks so much for joining us. And
thank you very much for having me. Look, it's an absolute pleasure. Thank you very much. So totally enjoyed myself. And oops, I'll delete that.
Yeah.
Next.
It's all bloody good. But yeah, looking forward to next time. Thanks for joining us.
Thank you very much.